following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Duke Ellington. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We have the Dow Industrials up 10, NASDAQ up 19, S&P's up 6.5. Gold contract down $3.70, traded at $1,205 an ounce. Silver up 3 cents at $17.14 an ounce. Platinum down 3 at $1,153 an ounce. Light sweet crude up $1.79 at $60.77 a barrel. Bonds, you have the 10-year up 14 ticks, 127.22. 30-year up a point and 21 ticks at 154.11. King dollar down 124 ticks at 95.38. You have the euro up 30 at 111, and the yen is down 34, trading at 121 flat. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We got a flat market out here. You take a look at this baby. We'll start with the SPY. You got summer trading. There's no two ways about that. We get 40 million shares. You're at 213.44. Bottom line, the longer it stays over this 212.24, saying, hey, you can make a leg up. That's the bottom line. Last 4 days have been anemic. No two ways about that. What you have with the last 4 days, volume-wise, we're talking 75 million on the 18th. You got 72 on the 19th. Yesterday you did 76. And today we won't even pump out 60, which is pretty wild. But bottom line, you get summer trading. I suspect tomorrow is even going to be lighter, folks, because you get the Memorial Day weekend, you get the kickoff of summer, and a lot of folks won't even come in. The NDX 100, what do you have with the 3Qs? Same type of setup in the 3Qs. Now, the 3Qs haven't hit the high yet. That high is going to get whacked. That's 111.16. Right now, we're at 110.55. We look at the small caps, the IWM. What do you have with the IWM? That's crawling, getting its way up into that high. I suspect that somehow, some way, that's going to also get hit. Now, the small caps, the IWM, you talk about a contraction of volume. It's huge. We've only got 11 million shares. The 11 million is going against 37. The price point right now is 124.91. The high out there is the 127.13. You know, somehow at least the low of the high will get hit, which is the 127.13 area. That's how I figure that thing's going to shake out. Gold contract, what we have with gold is this. Gold continues to build cause for higher price. They can't whack it down. They've been trying to whack it down a million times. Little exaggeration there. Been trying to whack it down many times in the last 3 months. What you had out here again this morning is this. You rejected lower price once again. You had dramatically lighter volume. We did 113,000 contracts. Right now you're at 1205. And bottom line, that's building cause, folks, to get up and into that 1269 area. Now, let's go to the bond. Well, yeah, let's go to the King Dollar first. So, what do we have with King Dollar? Now, this one's going to be really intriguing, watching how this thing's going to shake out. King Dollar right now is at 95.40. And what it's done, it came down with a vengeance. Does a counter-trend bounce last 3 or 4 days? Anemic volume. The benchmark on this baby is where we're going into the extreme downdraft on the 29th of April. The 29th of April, we went from 96.25 to 94.75. That's what it's going into. Somehow it's probably going to hit the top of that, which is about the 96. You know, yesterday it looked like that was the beginning of the C point of an ABC structure down. The way this is kind of trading today, it's like, you know what? It's going to try to pop into that. Either way, I suspect what you have here is an ABC structure on the way down. It's a large ABC, by the way. That would bring the dollar index into the 88 price point. If we go over to the TLT and we look at the bond market, we use the TLT, the ETF structure for the 20-year. What you're going to see here, this is another ABC structure on the way down. This came down with a vengeance. You know, we came off the highs that were generated out there on January 30th. That high was 138.50. You do the first leg down. The first leg down took you down to 122. Had the counter trend bounce up to 133. That counter trend bounce ended March 25th. You come down, and you come down with a vengeance. This little baby, this TLT, looks like it's going to do another leg down. The A point on this is 131, and your B is 118. So it's a very large ABC structure, 12-point ABC structure, which would get the TLT into the 110 mark. So it's a big number. Some of the high volume stocks we got out here, if we take a look at it, you have Bank of America is flat out here. Apple's up $1.22. Net apps are down $4. We have Best Buy is up $1.37. Lumber Liquidators is down $3.89. And what you have with Lumber Liquidators is that Lumber Liquidators, the CEO resigned today. Lumber Liquidators, folks, okay, we had brought this up before. This is, you can watch how this whole thing shakes out. This is going to be about as heavy as you get. And what it is this. Lumber Liquidators is a 66-point ABC structure on the way down. It had already taken out, if you take a look at lumber, do not touch liquid Lumberdators. This baby had taken out the B point with volume on the daily, weekly, and monthly, okay? Bottom line, the A to B equals C to D brings this stock to $3. Right now, you're dealing at $21.40. So it's a long way down, and when you do take a look at this, we're talking about an equity that, if in fact that's what comes up, will end up going from $119 to $3. Now, inside liquid Lumberdators, if you want to see something that's pretty wild, I was looking at this morning, and if you want to see how pros, supposedly pros, double down, well, I'm going to show you something. Okay, these funds are doubling down with everyone else's money. You have, I'm going to show you the largest differences. Well, here, watch this first. So the largest owner is Fidelity. Well, let me bring this up again, PHTC. So Fidelity owns 15.01%. Now, Fidelity last quarter didn't buy anymore, okay, but they didn't sell any either. They own 4 million shares. But watch this. This is where this gets really wild as to who was coming in buying it. You know, we always talk about when Fidelity's in there, you got MFS is in there. Well, guess what? Good old MFS right down the street from Fidelity. They're already in a losing position. They turned around and bought 128,000 more shares. And when I bring this up and when you really see who was in there buying, there were quite a few people in there buying on this last quarter. So this is going to get wild watching this whole thing shake out. You had Alyeska. Now, Alyeska, they came in new. Alyeska, folks, is the investment corporation for Alaska. You know, I remember when I lived up Alaska, it's Alyeska Pipeline, but Alyeska is the trust fund. And if you happen to live in Alaska, each and every year, you and all your children, you get a check off of that, and it's a big number. When we were up there, it was like about $1,200 or $1,300 a person. I don't know what it is right now. But bottom line, they're buying. A hedge fund. This is going to be interesting. But they could get out pretty quick. Susquehanna, they bought 418,000. Let's see. Goldman Sachs is in there. They bought 169,000. McKinsey bought 144,000. MFS, as I said, 128,000. Decent buys. The sells, a couple people must be just elated because Stockridge Partners got rid of everything. 1.9 million down the drain. See you later. Drama Capital, they sold 1.2 million. State Street sold more than half their position. They sold 735,000. Ameriprise sold just about their whole position. They sold 655,000. These are the filings as of March 31st. They come out about a week ago. UBS sold just about all their position. Waterfront Water Street Capital, Frontier Capital. Bottom line is that this is going to be a great window to watch to see, okay, if in fact that ABC structure comes into play and goes to zero. I can tell you this, and this is what I remember this so well, when the WorldComs of the world were doing ABC structures on the way down. I remember when someone had called about them. I said, oh my God, hold it, this is an ABC structure that you're going out of business. This is not the first time that when they do these large ABCs, you better believe what that A to B, C to D is all about when it's breaking with volume. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now are off $3. You got the S&Ps off up 2. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials are down 4. You get the Nasdaq up 15. S&Ps are up 4.5. And as we do each and every Thursday at 20 past the first hour, we get our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, 5 to 6 Eastern Standard Time, right after I'm off the air, Andy's got an outstanding show right here at TFNN. You can get that show right on your cell phone. TFNN.mobi gets you the audio. You want to get the video, go to TFNN.com. Well, on your cell. On the right-hand side, you'll see a little box. It will say mobile devices. Hit that box. You'll get the Tiger TV delivered as well as the audio. And, of course, don't forget, Andy has an outstanding newsletter. It's the Technomento Commodity Report. The way you test drive it, go to our website at TFNN, go to newsletters at the very top, hit trading newsletters. You can test drive the Technomento Commodity Report right here, 30 days, absolutely free. Andy Heck, what's going on?
Hey, Tom, how are you?
Doing great, man. You ready for a good weekend?
Yeah, nice long weekend.
I know.
That's a good thing.
It's
Lots of time to write.
Lots of time to write. I know you and I have been in summer for a while because you're in Las Vegas and we're in Florida, but this is the real kickoff. I know we're both up in the Northeast, and this is definitely the kickoff for the summer, right?
Absolutely. Driving season, baby.
Yeah.
That's why gasoline prices up 4.25 cents today.
Driving prices. I like it.
Yeah,
I like
driving season.
Supply and demand, right?
Absolutely. Absolutely. But, you know, the futures markets tend to reflect prices, a couple of months before. And right now we're reflecting that there's going to be increased demand in gasoline throughout the summer because of the lower prices.
That makes sense, too, man.
Absolutely.
And this contract today has some juice behind it. Yeah, you get 50,000 contracts. Interesting. Okay.
In gasoline, let's take a look.
Yeah.
Pretty good day. Pretty good day here today. Altogether, let's see, volume today, 151,000 across all contracts.
Okay.
So, yeah, some juice behind it. No question. No question. Hey, I want to talk a little about cocoa.
Okay.
Took profits today in the Technomento Commodity Report, 10.5% on a cocoa ETN. Just thought it was prudent to sell it because it's moved out very nicely. We've gone all the way.
What's that symbol? What's
CC?
CC. Oh, that's cool.
CC. And the product that we took profits in was NIB, NIB, which is the cocoa.
Oh, that's
ETN.
what I meant. Yeah, no, I had.
Right.
Okay.
Yeah. But cocoa has moved up from, let's see, very quick rally. From March 31st, we were trading at, let me see if I can see this, just under 2,700.
Yeah.
And today we're up to, 3,160-ish. Resistance at 3,300, but it's a demand-based rally, so I expect maybe we'll get some backing and filling. So I thought taking profits made some sense.
Yeah, no doubt. You know what's interesting is that I remember when because cocoa had been under 3,000 a ton for a long time, and I remember the first time you were saying that, man, I think this thing's going to get over 3,000 a ton. Now that almost seems to be the normal, doesn't it?
Right. It is. It's backing and filling around there, consolidating around there. I think eventually it's going to make new all-time highs because of demand. However, it's not a supply side shocks, Tom, take prices much higher very quickly. Demand that filters through is a slow and steady process, and that's really what we're seeing here in cocoa.
How cool is that?
Here. Yeah, which is really cool. It's really cool. Coffee got hit on the chin today, but I think that's an opportunity because, again, you have another long-term demand-based pressure on the coffee market because coffee consumption is going up all over the world.
Sure.
And, we're back down below 130, which I think is a sweet spot for a long position. But it's a wild commodity, wild ride. Always a wild ride.
This looks like an ABC structure down to 110. This is going to be interesting. Okay.
Yeah, it could be. I mean, the lower the better as far as I'm concerned. And what I'm suggesting is that people play the coffee market with call options. Much better. You want to stay in the position.
Cool. Yeah.
And listen, you're right. It could go down to 110. It could go down there by Wednesday, and then it could be 140 in 2 weeks. So you got to be really.
It's interesting. This will be like a total round trip because it started at 106 November of 2013. Right.
Right. 106 up to 230 and change.
Wow, that's crazy, man. Hey,
It's
so
coffee.
this is where, man, these coffee farmers, if they can actually get those higher prices, that'd be pretty cool, man. That's
Yeah, well, that's I think there's a lot of things going on in coffee. It originally rallied because there was a drought in Brazil.
Yeah.
There were rains this year, so the coffee crop is a little bit better.
Okay.
But hey, demand is going to take this thing higher eventually. But it's a crazy commodity.
Yeah, no, I'm with you. And
it's
that's
a
why
totally
the option on it makes much more sense, right?
Right. I really like buying options on this. I kind of like buying in the money options on it.
Yeah.
And then, when it comes time to take profits, you could just sell the underlying against it and create
Okay.
a put, or just book your profits that way. It's too hard to stick your toe into the futures market if you're a medium-term trader in something like coffee.
Now, this is pretty cool. I'm bringing up the option chain. So, really, I mean, coffee's at 128.45, and if you were bullish on it, if you bought like 127, that's not bad. It's at 461.
Mm-hmm. Yeah, and then you have like a 132 break even roughly.
Yeah.
By the way, we were there this morning.
Well, what's so cool about it is that you have a defined risk. I like those defined risk trades, man. There's no doubt.
What expiration are you looking at?
That's June. No, it's
June.
July.
July.
That doesn't even matter.
Yeah, I actually want to go out to September on this thing. I want plenty of time. Yeah, and that's going to be a lot more expensive, no question. I bet you that's about 8 cents or something.
You got 10.
10.
10 and a half.
Okay. I want time on my side because
But you know
options.
what? Hold it. That's not as bad either because that 10 and a half is already 4 cents in the money.
Right. So
what
really,
happened there, folks, just so you understand, exactly. So what happened there, folks, it is a higher price, but what's going on is that the September contract is trading higher by 4 pennies also than the contract right now. Mm-hmm. We're at 131.25, so yeah.
I think the thing to remember in all these things, and the reason I took the money off the table in cocoa today is because 2015, in my opinion, is a year for trading. It's not a year for investing. If you're sitting around waiting for long-term trends to develop, I think you're going to get very frustrated. I think you're better off trading something back and forth 10 times than looking for one big move here.
No doubt. And it's great that you can trade, you can be in the future market with an ETF, an equity ETF.
Right.
So, yeah.
Absolutely. Yeah. Absolutely. So, there's a gold. Hey, gold's back to the middle of the range here.
Yeah. No doubt.
Back to the middle of the range. It's kind of a real snoozer. The interesting thing, let me put a gold chart up here. I was looking at this before.
I love gold because all you guys hate it. You're all gold haters.
I'll tell you what I don't like about. I'll tell you what I don't like about the recent action from a technical point of view. I really don't like that open interest on May 11th was 400,000 contracts.
Okay.
And on the rally, we've gone up to almost 430,000 contracts. That means we've gotten some longs in, and those longs, when they sell out, they'll bring it down to 1175, where it looks like it's going to go much lower. And then it'll bounce back to 1,200. It just feels to me, Tom, like it's going nowhere.
Yeah. Well, that gets interesting because, as you said, it's a trader's market. Well, folks, what does happen? 1179 or 1180 to 1210. It's $3,000 for $3,000.
Right. Absolutely.
You stay right there, all right?
Yeah, sure.
It's Tom O'Brien, Andy Heck. You stay right there, folks. We want to hear from you. Our phone number is 877-927-6648. Coming right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the American Express flat. You get Big Blue down 32 cents. Walmart's up 25. Big Mac is off $1. And we're talking about our man, Mr. Andy Hecht. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, as soon as I'm done at 5 o'clock, Andy's got an outstanding show 5 to 6. And no matter where you are in the world, folks, right on your cell phone, TFNN.MOBI will get you the audio. You want to get the Tiger TV, just go to TFNN.com and hit that little mobile box, and you'll get the audio, plus you'll get the video. Okay, so we're talking gold. So, you get a range, there's no doubt. We'll see where this baby shakes out.
Yeah. I mean, the things that are bothering me about gold is the fail. It fails both sides. The fact that open interest spiked up on the recent rally, and of course, as I've been saying for a while, the divergence, the fact that platinum's cheaper, the fact that silver is cheaper. Those things weigh on me, and they're kind of signals to me that I should curb my enthusiasm and not got too excited about the gold market here.
Yeah, the platinum deal is a big deal. There's no doubt, man.
It's a big deal.
It's really interesting that has stayed down that long, folks. If you want some platinum jewelry or platinum coins, go get them.
Oh, I agree with that.
Yeah.
By the way, I do love platinum because I think it's going to outperform gold, whether gold goes up or gold goes down.
Yeah,
I really love long platinum, short gold here. And by the way, if anyone wants to do that in the futures market, it's 2 contracts of platinum long for each contract of gold short, because a platinum contract's only 50 ounces.
Okay. Oh, that's good to know. Okay.
So yes. I mean, I do like that spread. I mean, listen, the lowest it's ever traded was $200 discount.
Yeah.
And the highest it's traded is $1,200 premium. It's a no-brainer.
Yeah, I know.
In my opinion. I mean, and this is not for next week or even next month.
No.
For the long term.
It's right. It's basically it's a scalable model, because the fact of the matter is that, and what happens, folks, is this: fundamentally, platinum is not just harder. It's harder by probably 200 to 300 to 400% to get out of the ground, out of the ore, out of the rock, than gold is, and there's much less of it. Okay,
right, and it's not just rare; it's rarer. There's 250 tons produced a year compared to 2,800 tons of gold.
Right,
and on a per ounce produced basis, there are so many more uses for platinum than gold.
Oh yeah, and it's used, so there's not as much around. For the recycling, that's a big deal too.
Oh, right. Listen. Automobile catalytic converters.
Right.
Every fiberglass manufacturer uses a platinum-based catalyst to push the fiberglass through to make it. Petrochemical plants use it as a catalyst.
Yeah, right.
In chemotherapies, platinum is used tremendously for treating various kinds of cancers.
Wow.
It has a tremendous amount of uses, and there's very little of it around, and it's produced in 2 of the most difficult countries in the world, South Africa and Russia.
Yeah, exactly.
So, it's been sitting down here, as you said, but listen, every dog has its day. The other thing is the volatility of platinum is amazing compared to gold, much higher.
Yeah.
And when it does start to move,
it goes, man.
You can't get on board.
No, you
just can't get on board.
Right.
There's no liquidity. Take a look at the platinum futures contract for a minute and look at how much it trades. How many contracts gold trade today, Tom? 140,000 altogether, something like that.
Yes.
Let's see what platinum traded today. Platinum traded 6,883 contracts.
Right.
Right. That's a beast in the making. You know that.
No, it is. And what happens also, folks, is this: when you actually try to go buy platinum coins, you are not going to get a platinum coin at $1,200. It's going to be like $1,400,
The premiums are big, especially when the price comes down, and that's got to tell us something about precious metal prices too. When the premiums expand, that's just a function of supply and demand.
It is. There's no one. The price may be there. But the fact of the matter is, if you can't buy any, what is really the price?
Exactly. Yeah. Hey, now that it's Memorial Day weekend, we should talk about the meats a little bit.
Yeah, I would just pull that up.
Season.
Cattle. Yeah, let's talk. What are we talking?
Well, cattle.
We're talking hogs.
Well, let's talk both.
Okay.
Why not? Let's start with cattle, because we start with the burgers and steaks we're going to put on our grills.
Yeah.
And then we'll go to the ribs.
Okay, I like it.
Cattle is really in a very nice consolidation pattern here. And cattle is another one of these demand-based markets. You have increasing demand for beef, for animal proteins coming particularly from Asia, where diets and demographics have changed, increasing population and a switch from a rice-based diet to more complicated proteins is very supportive for the cattle market. No question, for the price of beef. Now, the hogs are a different story here. The hogs, we're getting the effect of avian flu.
Okay.
What happened is they're exterminating all of these birds. And we've seen. Let me just get the hog chart up here.
So you mean the avian flu for the chickens is affecting
Right.
the hogs?
Yes, because
Okay.
because pork and chicken are both white meats.
Okay.
So we saw before this bird flu thing started.
Yeah.
We had hog prices down around 72 cents a pound.
Yes.
Since this has started, prices have spiked up to 83. We have a 16% rally in the price of hogs, and I think it's substitution. I think it's
That would
demand
make
based.
sense. That would make sense.
I think it's demand based. So hey, these things should be peaking now, though, because they're futures markets and demand. Demand starts this weekend.
Yeah.
So, and runs throughout the summer. But this is the period between now, July 4th. This is really kind of the in the futures market. This is where we really reflect strength or weakness.
That's interesting, man. So what about, let's go over to the wheat contract for a bit.
Yeah, okay.
Because wheat, that
Had a nice move.
Yeah, that came off that bottom really well, man, right?
Absolutely. Well, Tom, when it comes to grains, the U.S. is the largest producer and exporter of corn and soybeans. But when it comes to wheat, we're kind of number 3. Wheat is a much more ubiquitously produced commodity. Wheat is a very political commodity because wheat is what is the main ingredient in making bread, and bread is the staple foodstuff around the world. Still is. I love bread personally, but it's a very important staple.
Yes.
So the weather, not just in the U.S. but around the world, affects wheat. The political situation around the world affects wheat. You have a lot of wheat that's grown in Canada, in the U.S., in Europe, in Ukraine, in Australia, in India. There's a lot of wheat that is grown around the world. So it's a very political commodity, and it's not just U.S. farming and weather that determines what's going on there. So very interesting. We had a nice little pop, and I think that pop was based on the fact that spring wheat, the Minneapolis wheat, has done very well because there's been unseasonably warm temperatures in the United States over the last couple of weeks.
Now, when they say spring wheat, does that mean that they're planting in the spring, or that it's been covered, with the snow,
It's
and then
growing.
it's going to come up in the spring?
It's right now. It's growing because the unseasonably warm weather is affecting the crop that's growing right now.
So
That
it
will be
popped
harvested
earlier.
shortly. Yes,
I see. Okay.
Yeah. So what you're going to have there is you're having some pressure on wheat prices because of a potential to damage to the spring wheat crop.
I see. Okay.
And that's traded on the Minneapolis exchange.
Yes.
And those prices are around $5.83 a bushel. So
wow,
you
that's
see,
60 cents more.
Right, it's a 60-cent premium. But there have been times where it's been $1 premium. These premiums tend to expand on the upside because what you see really is that wheat consumers tend to panic and buy and hedge when prices are going up, not down. So, we are seeing now some pressure on the Minneapolis contract. Actually, the spread for the winter wheat has gone up a little bit. So they're going up kind of across the board. But I think we might run into a little bit of resistance right here. Again, a year for trading, not a year for investing. I don't see any massive moves coming.
That's all right. Hey, there's nothing. Those are
nothing wrong with it.
Those are good sized moves, man.
Yeah, absolutely. Hey, one question for you.
Yeah.
Sell in May and go away in equities. What do you think this year?
Oh, let me tell you, I've been thinking of selling the last 5 years. So
okay,
you're talking to the wrong person.
Okay. All right.
No,
all right.
Listen. To me, the bottom line is that there's no juice to the upside. Someone just came up with something in the den that was pretty cool. So our man, Mr. Joe Granville, folks, he passed away this past year. But what he was looking at many times is that one of his signals was 20 new lows would be a Joe Granville buy signal. 20 new lows in the marketplace, meaning that that's a minimum. That's like insane that there's only 20 new lows. Well, right now, today, as of 14:39 hours, there were 22 new lows. So
wow.
that was interesting. Yeah, exactly. Do you know what I mean? So
very interesting. Hey, in that vein, let me show you if I can get this up quickly. Crude oil.
Yeah,
right?
Crude oil. Yeah.
We have a move up today. If we can hold today's level or go higher, it will mark the 10th straight week of higher crude prices.
That's pretty wild.
That's pretty wild. Keep that in mind.
No doubt. Listen, folks, you stay right there. My man, Mr. Andy Heck's going to be coming up 5 to 6 tonight right here at TFNN. And, of course, you can test drive his newsletter by going to TFNN. Newsletters across the top, the Technomental Commodity Report. Andy, thanks so much, man. Have a great one.
Man.
Look forward to the show in about another hour and 15 minutes.
See you soon.
Okay, man. Stay right there, folks. Coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We at the Dow Industrials right now up 13, Nasdaq's up 21, S&Ps are up 7.5, and as we're coming into these close out here, you're going to see this S&P bottom line. They want to push this thing up and over these last high levels. The high in the future is 2134 flat out. Right now we're at 2129. And what you can expect, folks, coming into Friday tomorrow, there won't be any volume, but they'll get this thing up at the highs. You know, Memorial Day weekend in itself and July 4th tend to basically have a bullish bias to it. So I expect that what you are going to see is that they're going to push this as much as they can. That's what it really comes down to. The Dow Industrials right now, we are trading out at a price point of 298. And anything over 288 is basically saying you're still at highs and you want to go higher. The NASDAQ composite, the composite still has a bit to go to get up to these highs. The composite is at 5092. The high that's out there is the 5119. What you do have is that the 5092 would be a closing high, though. In fact, let me just pull this up. I think this is would be an all-time closing high. So that'll be a lot of juice there. Yeah, I believe it would, because when we hit 5132 in March of 2000, it didn't close at that level. So bottom line, you can expect that also. We take a look at the NDX 100. They're using the 3 Qs. What you have with the NDX 100, that is as we're 110.57. The high is 111.16. So it's going to go for that high. You know, tomorrow I suspect we'll go for it. We'll come in with a volume that is so anemic it'll be a mind blower. Right now we've done 500 million. We'll bang out probably about 600 million on the NYSE, which of course is anemic, and on the Nasdaq, which is going after a new all-time closing high, we'll do about 1.6 billion. So that is a disaster, just sitting there waiting to happen. If we go over to the transports, folks, okay, bottom line is that these transports not only are going lower, but you're going to have now on a weekly basis a push into the lows, and you're going to be pushing into these lows. The lows that we're talking about are the 8,400 level with some real juice. The October 15th swing point out there, guess what? It's going after it. The high of that swing point, by the way, is 8169. And thus far, we've hit 8488. So we're very close to it. This week here, thus far, we've gone into it 400 points. All we got to do next week is do the same that we did this week, and that would mean that you're at the top of the high volume low. And then depending on how you trade into that, and it would need quite a bit of volume, by the way, to break it, because when we came down in all the indices, the October 15th swing low and high of that low on a weekly basis is huge. So markets themselves always have a chance to get into the high of the low first. And the great thing for the bulls is that those highs of the lows, very well, they're support at the beginning. You go into that too much price-wise or too much volume, and the way it goes is this. If you go into it price-wise, and you go in, let's say, in this case, that structure there is laid out. Well, that's a 300-point structure. You go into that about even 40 points, that's going to go to the bottom. You go into 10 points, no big deal. You go into it with volume, different ball game. You go into that with volume, it can take it to the lows, and then the real question is, will those lows hold? And that's where the case comes up always of the aspect of how are you building cause in order to either go higher or lower. The building cause structure inside the markets is really important to wrap your head around, because the more cause that's built, it's just like every day you're working out, you're doing something. Then when you come out of the line, you hit that thing hard, forget it. That's the building cause is the working out aspect of it. Repetition over and over and over again. The contest is the race. The race, once the race starts, once the game starts, the game is, am I busting higher, am I busting lower, and how am I doing it? That's, you know, and the thing that's really going to be intriguing here is, like, you know, why are the transports not only low, but dramatically lower, and want to go a lot lower? You know, when you look at some of these, they're just a disaster. And it's like, okay, so sector by sector, this little baby's going south. You know, you get Delta Airlines right now, flat out here today. That came down hard yesterday. And those October 15th swing points are out there to be hit. The top of the one on Delta is 35, and we're still trading at 43. You know, so you can see percentage-wise, that's still a huge amount down in the marketplace that the market itself hasn't taken advantage of just yet. If we take a look at what's putting juice inside the Dow Industrials today, you have Caterpillar, that's up $1.47. Apple is up 140. Boeing is up 92, and Verizon's up 25. Taken away from it on the way down, you get Johnson & Johnson off 44. Big Mac is down 87. United Health is off 81, and you get Verizon down 43. Inside the NDX 100, what we have, bringing it higher, the NDX 100 is up 24 points. Vodafone is the leader, up 150. NXPI, that's a semiconductor firm, that's up 377. You have Dollar Tree is up 234, and Walgreens is up 225. Taking it away on the way down, NTAP is down 350. You get Vertex Pharmaceutical off $1.50. American Airlines is there again, down 50 cents. And you got SBA Communications down $1.20. If we go over to the IBB, now this IBB, this is like the superhuman being. The IBB right now is trading at 363, and just let this be, folks, until it gets up and, number one, hits the swing point that it's going after. That swing point that it's going after right now is the 365.21. We got the 365.28 today. You did it with light volume. Don't pull the trigger on a short position on this yet. I wouldn't be pulling any short positions, folks, until next Tuesday. Because what you're going to have is this. We have the long weekend. Memorial Day weekend in itself, though, this is what normally happens. Tomorrow will be slow. We come back to work Tuesday, but Tuesday normally is slow also, because it's the beginning of the summer. Summer trading, what ends up happening, the market has a chance to break topside or downtown on Tuesday, Wednesdays, and Thursdays. That's how it goes throughout the summer. Once the market breaks, whatever way it breaks, then Mondays and Fridays, you can get juice behind the move. But the Tuesday, Wednesday, Thursday is what you're going to want to be watching. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming back. We get some numbers coming in after the close. Dow Industrials right now up 2. Nasdaq's up 20. S&Ps are up 6.5. We're going to be right back.
Many of our new... The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's Gold Report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Mark. All things are possible to him who believes. Beautiful thing. Market-wise, let's take a look at it out here. We have the Dow Industrials flat. NASDAQ is up 19. S&Ps are up 6.5. Gold contract down $3.10, traded at $1,205 an ounce. Now, what you have with gold, folks, is this. Wide price spread, accelerated volume last week, gets it up to about the 1232, pulls back, has heavy volume on Tuesday on the way down, gets to a lower low yesterday, gets a lower low today, rejects both those lows with lighter volume. We're 1205. Gold wants to run to about the 1250. Silver, same type of setup in silver. Silver's at 1714. That wants to run to that 1822 level. Platinum's down $1.80. You're trading at 1154. And what is unusual is that platinum has stayed under gold for such a long period of time. Right now, it's $50 under, and normally it's 200 over. So bottom line, if you want to go buy platinum or gold coins, go buy the platinum coin. The premium will be larger, but the deal is a better deal. Copper's trading down, where is she? Up 2 pennies at a price point of $2.87 a pound. Light sweet crude up $1.65 today, $60.63 a barrel. Bonds had upward movement. Bonds, you had the price spread coming in the 30-year, but no juice whatsoever in either the 10-year or the 30-year. We had the 10-year up 13 ticks, 127.21. 30-year was up 1 full point, 11 ticks at 154.02. Both of those, folks, look to be very large ABC structures on the way down. We'll go through them, but they had fast acceleration down. You're going up with lighter volume. It's coming in right to where it's downdraft. Basically had the most amount of volume. It's going to be really hard to break topside at that level. King dollar down 54 ticks, trading at 95.45. King dollar also looks to me like it's an ABC structure on the way down. The larger picture for King dollar looks like it's going to go to 88. And that's going to be quite a shocker because, of course, as King dollar had moved higher, the whole world thought King dollar was never going to stop. Well, King dollar had already gone up, folks, for about 2.5 years straight. It was a straight line shot from the 78 mark till the 100 mark. Inside a currency, that's an incredible move. It was a 2-to-1 ABC structure on the way up. Anything over a 1 to 1.618, the way up or the way down is an immediate change of trend, and that's exactly what we got on King dollar. Euro, just the opposite. Euro is up 19 ticks at 111.13. Bottom line, dollar lower, euro wants to go higher. Maybe they both may be counter trend bounce, but bottom line, right now it looks like it wants to go higher. The yen down 32, trading at 121.02. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We go over to the SPY, and this market is asleep, just like when the Fed minutes come out yesterday, folks. It was absolutely a non-event, and I expect what you're going to see out here until, next Wednesday we come back. We get a long weekend out here, and bottom line is you're at highs with low volume. What you do have is this, though. The longer that we stay at these highs, the more the market is going to have a chance to break topside. Now, yes, I'm bearish. I haven't changed that. October 15th swing low, that's reality for me. We'll see whether it's reality for the market or not. But what you do have is that the SPY is at 213.50. Well, the further away it gets of the 212.24, the more probability it has to actually do a leg up. And if it does a leg up, by the way, okay, a leg up would be a pretty big leg up. The reason being is that the leg, most of the time when you're doing legs up, what you do is that you take the bottom of the leg that was established, the last leg that was out here. So the bottom of that on February was like 197 going up to 212. So it'd be a leg. We'll see where that shakes out. I don't expect it. I'm just setting it up for the aspect of for all you bulls out there. We take a look at the 3Qs, what you have with the 3Qs. 3Qs, we did 16 million shares today. That's anemic. That is going into 31 million shares. You can see it's about half the volume. What I expect you're going to see out here tomorrow, we are at 110.57. The high is 111.16. It's going to get hit. It's going to get hit with dramatically lighter volume. It's going to get tested. We'll see whether the market can actually stay over that level. The IWM, if we take a look at the the Russell 2000, what you have with the Russell 2000, it's weak. The way the Russell 2000, however, likes to move, I expect the Russell is also going to try to make a move with light volume up, at least test the lows of the high. And the lows of the high in the IWM is 125.92. And right now we're at 124.97. So you can see that wouldn't be that hard in order to basically get up there and test that high. We take a look at there she goes. Whoa, what just happened here? Okay, gold market. Let's go take a look at gold. So what we have with the gold market, the correlation inside gold, too, flat out, folks, is still the U.S. dollar. Lower dollar, higher gold, higher dollar, lower gold. What is impressive about the gold market, however, is this, is that the aspect of how, number one, that they couldn't press gold under the 1142 even when the dollar was at 100. Bottom line, dollar starts pulling back. Gold goes from 1142 up to the price point of 1232. What we've done out here today is this. You pull back with lighter volume. You were pulling back into the sign of strength from the 13th of May. That's a big number, folks. 13th of May, what we had done is this. You went from a price point of 1190 up to 1218. You did 242,000 contracts. So that was showing wide price spread, accelerated volume. And when you do something like that, whether it's up or down, what you look for at this particular point is you look for the pullback. How is it pulling back? What is it doing when it's pulling back in? Well, in this case, we got down to 1,200 today. You did volume of 115,000. And that 115,000, it rejected lower price. It had lighter volume. You got back inside the range. You're at 1205. What that sets up, it wants higher price. What we have also is at the 13th, that 13th was basically blowing away the swing point and was blowing it away with volume. That dictates higher price. We get into the silver market. What we have with silver, same type of setup. Silver, even though it's basically lower, looks to me that it's actually stronger than gold. Now, silver is highly volatile, about 3 times as much volatile as gold. If gold's up 1%, silver's up 3. If gold's down 1, silver's down 3, okay? Bottom line, what silver is almost at, we're at $17.15. The high of the day of strength was $17.23. So even when silver pulled back, it only pulled back to $16.80 and then got out of there in a heartbeat. Silver wants to run up to this $18.55 area. That's a big heads up, because what you do have is this. There's enough folks that figure that neither of them are going anywhere. In fact, the whole world actually thinks that. And that's what it takes in order to get to higher price. That's just how markets like to shake out. If we go over and we take a look at the bond market for a second, we take a look at the 10-year first, what you're going to see is this. The 10-year out here basically got a nice little bump up today. You did 1.2 million shares, but contracts, that's not enough, folks. It needs like 2 million contracts. This is building cause to get into lower price. In fact, it looks like a very large ABC structure on the way down. Your A point is 129.31. Your B is 126. So we have, so that's $3, which will get you to 125. The 30-year, what we have with the 30-year is this. 30-year is right now. Oh, yeah, see, in the 30-year leads, folks, this is really cool watching this shake out. The 30-year today was up a full point and a half. We did 235,000 contracts. Well, 235 is not even close. You're going into 360, 378. This is building monster cause to make another leg down in the marketplace, okay? So it's pretty intense. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We got a bunch of numbers coming out, a bunch of earnings coming out. Dow finished flat. NASDAQ was up 19. S&Ps were up 6. Gold is trading at 12.05. You got platinum plate trading at 11.54. Light sweet crude, 60.62. We're going to be right back.
If you're like me, you see the world's emerging nations as a very real opportunity.
as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish flat, NASDAQ up 19, S&P's up 6, and as we do each and every Thursday at 20 past the second hour, we get our man, Mr. Basil Chapman. Don't forget, folks, Basil has an outstanding show right here every trading day, 11 to 12, Eastern Standard Time. Also has a great newsletter. Now, the way you get the newsletter, you come over to our website at TFNN. You'll see newsletters across the top. You hit newsletters, hit trading newsletters, see opening call. You can test drive Basil's newsletter 1 month absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You ready for a good Memorial Day weekend?
I certainly am. Yes, absolutely.
So summer's finally come in up there, I guess, right?
Oh yeah, it's really terrific. We've had 4 or 5 weeks of outstanding weather. Cannot complain at all.
That's a beautiful thing.
It is.
So what are we going to look at today, Basil?
Well, as usual, we're looking at the Dows when I show my subscribers to my opening call every single day using the Chapman Wave methodology. What's really interesting here is that there's a pattern that's formed, and we were forced from last Friday's action to go back more towards the long side because there was strength in the indexes and just enough stocks in each sector were showing strength. And that's one of the things that is very unusual here. If you look at the chart from the 18,288 high back on the 2nd of March, it's taken 2.5 months to break to a new high, but it's just a very modest high. The highest we've been now is 18,351. It's just 70 points. So you've taken basically it's 3 to 4 months. You could even go back further and say we've been in a very long sideways consolidation.
Okay.
However, what is really important here is the pattern that I'm looking at. If you look at my chart, you'll see that from that high of the 2nd of March, you've made a cup formation. It's taken about 32 days to get to that little doji candle there that I call peak C at 18,169. That was, I think, the 16th of April. And we've come down. We didn't make new lows. We made higher lows, and we've now started to make higher highs. But basically, what we're looking at is we're in an up channel, and if you look at that pink dashed line, that's produced a lot of resistance. So I'm looking at this area right here, and that says between 18,360 to 18,390s in the Dow. That's going to be the test, because if there's a break into the 18,400s next week, that's going to suggest that even though there are fewer and fewer stocks that are leading, there's just enough upside momentum to say that I have to call this peak B, with a leg C and a leg D still to come, which is in the very short term, that's still bullish. If I look at the weekly chart, we've also snuck to a new high there. So this is leg E in the monthly chart, in the weekly chart. What's really fascinating, look at this up channel in the weekly chart. There's been a very beautiful concerted effort to trade mostly right between these trend lines that are moving higher. And if I overlay that, if I go to the S and keep looking at that chart, now I'm changing it to the S&P. Well, I should do it right there. You're going to see something that's even more remarkable. Look at this. That's the S&P. It actually goes back even longer than the Dow in this channel. Even it's conformed to the highs. That red line that is resistance, I'll expand it so you can see. The red lines that are all resistance, I call this in the Chapman Wave the inside track repellent zone.
Okay.
And it just got there in the S&P at 2119 back the week of the 27th of February. And then it pulled back, and now it's gone. It's just touched what I call the inside track buy or propellant zone, and it's pushed above it. And if you look at the black line, that is the 9-period exponential moving average. It's showing that there isn't tremendous strength because it's really hugging that line, using it as a base of support. It can't break away too high, away from that 9-period moving average. And if you look down here at the MACD, the MACD has turned positive, but the beta, the distance between the two moving averages, it's a squeak to the high side. And it says that the upside should, based on this methodology, should be somewhat limited, but it's still positive. And the stochastic is positive in the weekly at 93%. So my contention is that it's going to be a really important period coming up next week, especially if I start to see peak Ds and Es, which could take us either into next week or the very beginning of June. But this is actually a very important period for 3 reasons. One is the volatility index has just subsided. It is way down. It is getting back into the 11s. It didn't quite get there today, but if it gets into the 11s and holds, it can allow for buying pressure to be maintained. The second thing is we're looking at the dollar within a trading range, but towards the lower end of the trading range, just as the TLT, you were talking about this before, the bonds are in the lower range. They've had a very nice pop to the upside. We don't know whether it's going to break down or move higher. But having moved this sharply so quickly, I'm going to show you something else that's also part of this.
What do you think about the transports in correlation to the Dow Industrials?
I was talking about that on my show both yesterday and today. I'll just quickly show you that this is the yield, the 30-year yield, the 10-year yield, and the 5-year. And you can see that they've broken out, but they're still within a trading range that they've been in for a very long time. So you spoke about the, I'm going to the IYT, that's the iShares of the transportation ETF. It's iShares Dow Jones Transportation Average Index Fund. And you can see in the monthly chart, this is the part that says to me, I think that we have fairly limited upside, and then we could be pulling back quite sharply. I don't really go with Dow theory because there are so many times where you get a Dow theory correlation where the Dow is at a new high, the transport's at a new high. That doesn't mean very much because you can easily pull back after that. But look at the arch formation in the monthly chart. That says to me, you got to be really careful here, even though it's been time that we've used since the high that was back in November at 167. You used up time. You're in a down channel. It isn't a very sharp trending down channel, but it's using up time. If the I'll just make it real simple. If the IYT at 153.42 in the next 2 weeks closes under 150, I think it's going to portend weakness in the overall market. That's the correlation. It isn't an immediate correlation, but there always is a correlation at some point, and one of them has to come to join the other. And my suspicion is that the market will pull back with the transportations indicating. And remember, I spoke about 5-6 weeks ago, and I said, I think that we're looking at a mini slowdown. I can't really call it a recession, but a lot of things that I'm looking at suggest that we're in the transports also, as well as the retail index, the RTH, suggests that we've been in some kind of a consolidation, an economic consolidation over the past.
Well, the market hasn't moved in 8 months.
And as we were talking about, yes, it's really a sideways move, nominal new highs in the sectors that have gone higher. And so this is very unusual to use time in this type of market when you've been in a 6-year bull market. You know, how often have we been in a 6-year bull market without 122% correction and all the rest have been less than 10%? So whether we
give me a 12% correction.
I'll take even a 7 or 8% or no. We really need it. You know, we need it because you need to refresh. You need to have new leadership. And even, I'm looking at this, the market vectors retail. You've got Walmart, Home Depot, Amazon, CVS, Lowe's, Costco, Target. This is a real mixed market. I could go through every one of those stocks, and each one's doing a different thing.
Well, listen, folks, every morning, 11 to 12 Eastern Standard Time, you can listen to Basil right on your cell phone. TFNN.mobi. On your cell, you can also go to TFNN.com, watch Tiger TV. Basil, have a great night, safe night. Look for the show tomorrow.
And have a great long weekend, Tom.
Thank you, man. You too. Come right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. ETFs. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow Industrials were flat out there. The Nasdaq up 19. The S&Ps are up 6. We are at the 21-29 level inside the S&P. And bottom line, you get light volume. You get holiday trading in an extraordinary way, no doubt. We'll see where the whole thing shakes out. Numbers-wise, we got a bunch of numbers that just come out. You got Ross Stores, number one. That closed at $101.55. That's trading flat out there, same price. Let's see what they have to say. Okay, so let's see what we got. They have their first quarter comp sales. The estimate was 3.4. They came in with 5, so the estimate was over. They gained 1.2 in market share. The earnings per share, the estimate was $1.28. They came in with $1.33. Their revenue, the estimate was $2.89 billion. They came in with $2.94 billion. So the bottom line is that they had it all around. What they're saying on the second quarter, The estimate right now is $1.26. They're saying that they're going to do $1.19 to $1.24. So they're actually coming in a couple cents over that. If we do look at the equity number one is at highs. And bottom line, you get juice up at these highs too. This is pretty intense. This equity has juice behind the move. In fact, let me just see something. Let's look at ABC structure on the way up. If we take this, I'll put this on a weekly. Yeah, this is an ABC structure on the way up. This is pretty intense. People like these raw stores, you know. Okay, so this is what you have. Your A point on this, it's a big one too. Let's see. That's the one. I see what's going on. Okay, so A point would be 79 to 97. So you got 18 bucks. 90, that's 108. Yeah, so check this out, folks. Okay, this is wild. This, you know, when these ABC structures hit, folks, it's pretty amazing when they can actually hit to the penny. This finished an ABC structure on the way up. So what you can expect, this will consolidate for a while. Right, 108 was the ABC structure on the way up. What it had done, it had taken out the B point with the vengeance the week of the 27th of February. On that weekly basis, it went from 96 to 106. ABC structure on the way up, and it finished the move. Pretty wild. Hewitt-Packard, HBQ. That just come out with numbers. Let's take a look at Hewitt-Packard. Hewitt-Packard closed out here at a price point of $33.83. It's trading right now at $34.30. Numbers go like this on Hewitt-Packard. They reported second quarter profit that exceeded analyst estimates as corporate technology spending picked up ahead of the computer makers' planned separation into two companies. Profit before certain items was 87 cents a share for the period that ended in April. The company said Thursday in a statement. Analysts had projected 86 cents. Their main business, selling servers, software, and personal computers, have been weakened by the twin forces of cloud computing and mobile devices, which lets corporations use less on-premise technology. There's no doubt. Let's just see. We'll cut right to the chase with the actual numbers. Their revenue, 25.7 billion. Was actually a little short, 25.5. If we take a look at the technical setup inside it, this stock has been in a downtrend for quite a while. It's come off the highs of 41. You're at 33.83. This thing's not ready to be bought, not even close. BRCD. We take a look at Brocade rather. Brocade Communication closed at a price point of $12.12. That's trading at $11.72. Numbers go like this on Brocade. The estimate, third quarter revenue. Okay, the estimate was $551 million. That was their gross estimate. They came in with $546. So they basically didn't hit that. They hit their earnings per share. But the market's always looking, folks, okay? When you hit an earnings per share number, if you can't hit the gross, it's like, okay, what have you taken out of the market to basically hit the number? So that's where the whole thing is shaking. On the third quarter coming up, that we're in right now, actually, the estimate was 22 cents. They see from 21 to 23. Their gross margin is still at 66%. Their revenue number, they see the revenue coming in short for the third quarter also. Adobe, ADBE, let's see what Adobe has to say. Adobe out here, Adobe closed at $80.56. There she is. Adobe's trading out at $80.56, same number there. And Adobe had got hit hard, folks. Oh, no, it's not Adobe. One second, maybe it is. No, it's not Adobe. Adobe's at highs. Think of something else. Okay, so Adobe is at highs right now. This is going to be wild watching this shake out. Okay. Yeah, you're at highs. See, we're at 80.56. Numbers go like this on Adobe. I see. They didn't come out with numbers. What Adobe did, they were predicting their travel spend. Adobe today released its annual digital index travel report, which reveals the best times to book. Oh, that's not right. That's air travel. Not sure why I got that in there. Intuit, I-N-T-U. Let's go take a look at Intuit. Intuit, of course, is the QuickBooks. And there's no doubt that they have a business plan, folks, QuickBooks. So QuickBooks closed today at a high, 104.79. QuickBooks out here is trading at 104.75. Numbers go like this in QuickBooks. Fourth quarter, we're dealing with fourth quarter here. Okay, so the estimate was 4.35 billion. No, here it is. Okay, their estimate was $2.75. They made $2.85. Their revenue was 2.15 billion. They did 2.19 billion. So they had some pretty good deals going. Intuit Incorporated shrugged off setbacks for its TurboTax software, including a rise in fraudulent state filings to generate sales that exceeded analysts' estimates for the most important quarter. The Mountain View, California company reported revenues of $2.19 billion, which was topping the $2.15 billion of the average estimates. What you have with Intuit, too, you know what's so wild is that just today, QuickBooks, of course, folks, is a great system. There's no doubt, it's so easy. But they're getting good action on this right now because what you do have is that with and the reason I know is that we do it from the cloud, and one of the subscriptions, and they're so smart how they do this, and our man, Mr. Dave White, always explains this about software licenses and how Microsoft does, the expiration of software licenses, and what ends up happening is that they no longer will support it. What happens is that the license itself, you can continue to use. Like when you have QuickBooks. So we use QuickBooks, and, it's a great system. And what happens is that we could continue to use the same system that we're having. But if we did that, then you don't have support. And, sometimes there's complicated issues that, you need support behind the deal. Bottom line, $299, you get a new version that's coming out. You get support. You get all the ball of wax. It literally basically is almost a no-brainer. Because the system is that good. So the system is extraordinary, but I can tell you that happened right here today at TFNN, which is pretty cool. Let's go take a look at OTIC. OTIC. We'll see what this thing is. This thing is, whatever it is taking a dive in an extraordinary way. Okay, this is a biotech company. This closed at $31.05. It's trading right now at $27. And let's see what exactly. So it's a clinical stage biopharma company. They develop treatments for inner and middle ear disorders. They have 40 employees. They're in San Diego. They have a market cap out here. Oh my God, a market cap of $749 million. This is always crazy. So check this out. This is so far. If you don't think we're in a bubble, folks, this is how crazy this gets. I gotta look at this again. This guy, I gotta be wrong. No, I'm right. So check this out. OTIC has a market cap of almost $1 billion. Well, they're 250 short of $1 billion. $749 million. And they have zero income. I'm talking about zero gross income. Yeah, you heard that correctly, folks. Zero gross income. And your company, the market is valuing it at $745 million. Well, after tonight, they just took off, what, $5? So that's 20, about 25%. So now it's worth $500 million. Figure it out. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. And if we, that biotech bottom line is that let's go over and actually we're going to bring up now that biotech, okay, different ball game because the fact of the matter is that you have and there's many biotechs that do not have income, any gross income whatsoever, but they're looking for some breakthroughs. It seems unusual that you have a company that has a market cap, though, of $750 million without it. Bottom line, that's not going to be tonight. But if we go look at the biotech index, the IBB, what you're going to see in the IBB is this. Now, the IBB, the high that it's made, and I suspect we're probably going after once again, is the high that was established on March 20th. You opened at a price point of $374, and that was the high. You opened at the high, and you sold off. Now, that's not a high volume high, so that doesn't have to get tested, number one. But the low of that high is exactly where we are right now. So as soon as you get into the low of the high, which we did today, it's 363.63, which is a mind blower. We got with 365. The probability is that, hey, listen, that can get up and get into it, and then that's going to be the test. Now, if that's what we get, bottom line, maybe Wednesday, that would be a great place if you happen to be a trader that you can basically lay off a couple options, put options, instead of the stock. And the reason I'm saying it is this, is that there's two different things that have happened here. Because the IBB itself is highly volatile, but it hasn't been just as the market has not been. The VIX is getting very low. So what the IBB has done is that the last low that was established out there was $333. That was on April 30th. It's gone up since then, just crawled up every day. Well, what happens, folks, when it crawls up every day, it flattens out the premiums inside the option market. And that's what has happened inside the IBB. So what ends up happening there, when we take a look at that structure, you're at a price point of 363, and you can get something that's in the money at about $10. Now, that seems like a lot of money, but that's not a lot of money in the context of how the IBB trades. The IBB, folks, okay, trades each and every day, most of the time, $8 to $12. So you're talking about a premium of $10. You're talking about in the money, and then what you're doing there is, of course, you're giving yourself some time. The aspect of the option market in general is that we have some decent time, particularly in the month of June, because the way that June has come up in the calendar, folks, what you have is that the third week in June. So right now, we're at the 21st, okay? And this is what's so cool, is that in the option calendar, it's the third week of the month. And in June, what we're dealing with is you're dealing with the 26th. So it's the third Friday, rather, in June, not the third week. It's the third Friday. So that's pretty neat, and that's what happens here, too. That is the most that it can be, because of the fact that in May, what ended up happening is that it was an early option month, okay? So it just happens to be how this thing lays out. In May, it was the 15th. It was last Friday. So you can see what happens is that it's a short week next week, but you have next week, then you have 3 prior weeks after that. So that's something that, you basically you can take a look at. Inside the IBB, you got Amgen's way off its highs. That little baby has already come down. The strength, when these things do move, okay, they move. The largest weighting structure was one of the first ones that come off its high, and that was Gilead Science. Gilead Science had basically come down pretty good. Got into a 96 area, actually, slammed down into 85. And now what it's done, it's made itself all the way back up to the highs. And what does it have? Well, guess what? It has dramatically lighter volume. This is a nice setup. Again, though, I'd let it go test that high. You want it to test that high. And this is where you can put the indice, the ETF structure itself, together with the weighting structure of what's inside the ETF structure. In this case, Gilead is the highest weighting structure inside the IBB. You're right next to the highs right now. Give it a few more days. The 116 will probably get tested. We're at 111.22. Then, if it tests with volume and holds price, well, guess what? You don't go short the IBB because that's saying it's going to go higher. It does it, then guess what? What ends up happening there, your probability gets a lot higher because what we have had is that when we take a look at this, Amgen is already off its highs. Biogen, which is BIIB, let's just see where Biogen is at this particular point. And this, yeah, Biogen's off its highs too. Biogen, it was highs, it's way off its highs. So Biogen's high was 480 or at 401. So those are the three largest weighting structures. If we go to Celgene next, that comes in next, CELG. Where's Celgene here? Celgene's off its highs too. So what you can see is that the IBB also is what has been holding and does hold the NASDAQ, the NASDAQ composite up at higher prices. And I believe what we have out here today, and this is what you may very well hear, that today was a all-time closing high inside. It's not that we went to a higher price, because the higher prices we had gone to last week. It was 5119, but we didn't close at that level. We closed that day at 5005. And right now we're at 5090. So I suspect what you're going to see when we do come into this close out here tomorrow, we're going to be closing at highs. Don't forget, folks, at TFNN we do 10 hours of live programming every trading day. Get it all right on your cell phone. TFNN.mobi. If you'd like to get Tiger TV, just go to TFNN.com. You'll see the box on the right-hand side, the mobile devices. You hit that box, it'll get you Tiger TV. And, of course, inside Tiger TV, what you have the audio and you have the video. You stay tuned right there. Our man, Mr. Andy Hecht's going to be coming up, growling and prowling with you. And always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow. Go get them, folks.